What's up, everyone? Welcome to the daily macro update for Wednesday, September 24th. Taking a look at some of the macro data today, the United States home sales, new home sales, hit its highest number since 2022. Taking a look at this here, over 800,000 new homes sold in the month of August. That's a pretty large acceleration. And, this is anticipation of rate cuts. And I'm sure you'll see a large surge continue as we get data for next month as well. But, just going back, let's see if we can go back as far as we can here, going all the way back to the mid 90s. As you can see, this 800,000 level has really only been seen a couple times, even since the Great Financial Crisis, right? So really the last couple times that we've seen this number is around, the peak of the last cycle in November of 2021, January of 2022, right? The hot season, and then as well during the pandemic itself, right? And so this is a very large acceleration for new home sales. This is the power of what interest rates can do. But the problem is that you have housing prices still remaining. I think the average home sales price is around $500,000. We can take a look at that in a second. But if demand is increasing and prices have pretty much remained the same, what do you think that's going to do to prices? And so all of the praise that Jerome Powell over at the Fed was giving to the slowdown in housing inflation, it's pretty much all going to go away now that a bunch of demand is coming back onto the markets, right? Taking a look at some of the more weekly updated data, mortgage applications surged last week. We also saw for the third week of accelerations in a row. So yeah, I mean, you're just continuing to see the MBA purchase index accelerate, mortgage market index accelerate, as well as refinancing index accelerate. So, there's a lot of people, for those economists that were talking about the pent up demand for housing, right? There are a lot of, people my age, young adults who, have just been waiting on the sidelines to purchase their first home. And as rates come down, people are going to jump on the train essentially. And especially right now with a lot of new home builders giving out deals where they'll actually help you lower your interest rate because you'll take it through, the lender instead of with the government. This has been going on. I forget what the exact term is. So for those who are in real estate, if you guys wanted to leave a comment for what's that called, where essentially the home builder puts in the deal for these new home sales that they'll help out with the interest rate there. I forget what that specific term is called. But yeah, this is pretty interesting here. Again, with housing prices as high as they are, we'll see what happens there. Interestingly, let's see if we take a look at the housing market indices here. Let me just take off the trading ranges and volume. So taking a look at some of the housing prices indices, these have been bullish pretty much since June of this year, right? So housing construction ETFs like ITB as well as XHB, those remain in a clear bullish trend, some of which are actually presenting an opportunity at the low end of the trading range here. And so, we'll see if that continues here, but those are looking like they're providing some opportunities for buys. LEN, DR Horton, a lot of them are, have been having declines, but those could be making some higher lows there. And then when we go to the housing supply, so these are actual builder stocks, right? So BLDR, HOMZ, TREX, a lot of these have been breaking trend, especially BLDR and TREX, right? Those flipped from bullish to bearish pretty quickly. And then Lowe's and Home Depot, interestingly, are having similar corrections, but those still also remain in bullish trend. So in terms of prices, those continue higher. In terms of supply, those are having a correction. And then when we look at housing demand stocks, right, like Invitation Homes, American Homes for Rent, we also have the Mid-America apartment communities, Equity Residential, as well as Essex Property Trust. Those actually remain in bearish trend here. So, I mean, we'll see what happens with the actual housing demand here. But as you can see, it may not be enough, right? Even if you do have a couple months surge in the housing market, you're really seeing a lot of these different demand stocks coming down with supply. So, we could see some further price declines in some of the hot areas like Texas, as well as maybe parts of California, as well as Florida. We'll see. Specifically in my part of the area, I live in South Florida, specifically in like the Broward County area, West Palm Beach. Those housing prices had a huge surge during the pandemic, and now they're finally starting to come down as the whole back to the office mandates continue forward from last year, and a lot of people are moving out, and so it's very interesting to see that happen. But could be some good news for new home buyers, so that's definitely something to keep on the lookout for. I think we also get existing home prices or existing home sales data tomorrow, so that'll be interesting. Taking a look at the market in general here, the dollar is having an interesting bounce. The dollar really hasn't had too much of a significant move. It's at the same level that it was back in mid-June. So, over the past 3 months, it's remained relatively flat, even though it's had some ups and downs, which is definitely interesting. It's not going down as much as people think. And then we're also having a little bit of a acceleration in bond yields, right? So this is just like what happened last year when they cut by 50 basis points. You're starting to see yields rise instead of continuing to fall. And then yesterday, if you guys watched the live stream, we covered what Jerome Powell was sharing in his presser that he did for that conference. And it was kind of interesting how he was less dovish than he was during the Fed meeting last week. And so the big takeaway was that he was pretty much, focusing on inflation and reiterating that if inflation continues higher, then, they're going to continue to be data dependent, taking it month by month there. And so as we continue to get rising inflation data, while growth, pretty much, even though it's had a little bit of a rebound, it has had a little bit of a rebound here in the last couple months. It's not a significant rebound to where you can clearly see an expansionary trend, right? And so growth is pretty much remaining stagnant to slightly higher, but it remains low. And then obviously with inflation expectations, that has continued to remain sticky, and that's partly why you see gold doing what it's doing. A little bit of a correction today, so if you guys were selling some into strength yesterday, that was the right move to do, because I mean, we could see this come down to the low of the trading range for something like GLD, which is the preferred ETF that my team likes. The low of the trading range isn't for a little while here, so it could come down a little bit more. We also like the ETF AAAU. That's another one that's pretty decent there. All right. Yeah, taking a look at Bitcoin miners. I mean, geez, these things, Bitcoin miners just continue higher. The main name that has the largest weighting is IREN. That has had like a crazy 4x just in the past 3 months. So yeah, hopefully you guys were getting that in the portfolio. Bitcoin miners have been pretty bullish for that longer period of time, for the majority of 2025 actually. So yeah, plenty of chances. Bitcoin having a little bit of a pop here. I'll probably reduce some before actually the market just closed. So I have IBIT for my trading account. I do have a long-term Bitcoin account, but I'm not really selling any of that. Solana, AVAX look good. S&P 500, taking a look at the trading ranges here. As you can see, it's pretty much been pushing up next to the top end of the trading range, and now we've had a 2-day deceleration. Still have a pretty decent amount to the low end of the trading range here, so we could see a little bit further, maybe another 100 basis points or so down before I start to think about looking for bullish trends to buy. So we'll see what happens there. But definitely wouldn't be surprised if we continue to see more of a correction from where it was. On the contrary, though, we have different assets like Tesla that are remaining near the top end of the trading range and are pushing higher. But yeah, some of the mega caps such as Google are also having a bit of a correction. Amazon went from bullish to neutral in our model a couple days ago. So, yesterday. So that's pretty interesting there. And yeah, I think the biggest development from what I'm seeing, I mean, we really haven't seen this really since the market crashed, which was that net central bank liquidity has really decelerated here in the past few weeks, right? So ever since the end of August there, this has declined about $500 billion, which is pretty significant, right? So yeah, that's pretty much what I'm looking at here. And what we can do is now we can get into some questions. Just lastly, though, actually two things. Despite the market having a little bit of a correction, there's still, over a 94% chance that the futures market has the Fed cutting at the end of next month. Or no, actually, there's, the October FOMC press conference. And then what's interesting is I wanted to bring this up. I did tweet this out, but this is showing the yield curve, the United States yield curve, on a 1-year rate of change basis, right? So this blue here, this blue yield curve is the current one. And then this orange is the yield curve from 1 year ago. And what do you notice here? That was the question that I posed. And what's interesting is that, when taking a look at the 2-year US government bond yield from last year to this year, there's really not much of a change, right? This time last year, it was at 3.559. So basically 3.6%. And right now it's at 3.6%. So on a year-over-year rate of change basis, the short end of the curve, the 2-year yield has not changed very much, right? So there's pretty much been a constant expectation of rate cuts on a year-over-year basis. But then as you go farther down the yield curve here, you actually get a widening, meaning that, when it comes to the bond market's future growth and inflation expectations, those have actually risen. But, we actually have not seen growth rebound as much as we wanted to. So we may not necessarily see growth rebounding, but, this could be taking into consideration stickier inflation. So, yeah, I mean, pretty much the main steepening of the yield curve has been a rise in the 10-year, which could be that could be interpreted as more of a growth or inflation signal. So, yeah, pretty interesting seeing the actual year-over-year change with the yield curve there. But let's go ahead and get into some questions here. Lots of interesting developments. Still, having the VIX pretty low, right? So volatility is pretty much remaining suppressed, below 17. A little bit of a pop here over the last few days, but, even with this correction that we're seeing, volatility still remains pretty low, right? If we do get a large acceleration in volatility up to, 19 or 20, that would probably be a pretty big buy signal, so long as the trend remains on things like the S&P 500 and stuff like that. But all right, what questions do you guys have here? Let's see. Going over to the questions in the Instagram comments. Bank of Japan cut investments into the Japan market. Well, I know that the Bank of Japan has been raising rates, so they're actually having, for the first time in a long time, some inflation problems. Stablecoins got deployed into the system. People exchange cash slash bank money into stablecoins. I don't know if that's actually happening. Stablecoin dominance hasn't necessarily risen that much, right? So if you go to, let's see here, we'll just do USDC .d plus USDT .d. Yeah, so I mean you've had a little bit of an acceleration here since the end of July in stablecoin dominance, but if you zoom out, stablecoin dominance still remains relatively low. And so yeah, the whole stablecoin narrative I don't think is it's not showing up, at least in the data. So yeah, I don't necessarily think that there's like a huge rush into stablecoins right now, because why would you do that, by the way? Right? I mean, you essentially get the same yield in a money market fund that's just as liquid, if not even more convenient, right? Because at least with stable coins, you have to transfer money to an exchange, whereas with money market funds, you can deposit it into an insured brokerage like Charles Schwab or Fidelity, and that's way more credible than Coinbase, and you can get the exact same yield, right? So you have to think of incentives. People aren't just automatically going to send their money into stable coins unless you can really get an absurd yield, right? Because all it is for these cash and cash equivalents, it's battle of the yields. How are you going to attract different investors on a risk-free rate? So there's that. Builders offer in-house financing, mortgage buydowns. Yes, that's what it was called. Thank you, NOE_D. Mortgage buydowns. That's right. Are there any real estate stocks that you are watching? What do you think of Rocket Mortgage? Well, I mean, pretty much the stocks that we look for in terms of housing, in terms of demand, are these types of names here. If you guys can see that on the right-hand side of the screen, these are the ones that we look at in terms of supply and then prices. Vietnam blocked tens of millions of bank accounts, forcing public into some kind of CBDC. Okay. To confirm, that is your list that you created on TradingView? Yes. And if you guys would want access to this list, we have our global macro dashboard that you can download, right? Just shoot me a DM for those who are on Instagram or TikTok. Just shoot me the DM toolkit, one word, TOOLKIT, and I'll go ahead and send you a link where you can put in your information so that we can email you a PDF copy of the global macro dashboard and the toolkit itself. That way you can just load it up to TradingView and you can see exactly what I'm seeing, right? Pretty important there. Good question. Great question. Great question. Matthew Wright says, do you only buy things at the low end of the trading range, or if it's a really bullish trend, you sprinkle a little bit halfway down? Seems like some stocks don't hit their low end of the trading range. Yep, and this was actually a discussion that we had pretty extensively in our Tuesday meeting last night. And some of our partners were asking, this question. And essentially, the perfect setup would be something that's in bullish trend, that is at the low end of the trading range on lower volume with bearish volatility, right? That's essentially the best setup, as well as something that's also in a more favorable macro environment, right? So having all the stars lined up, that's the easiest way to make a decision on buying something. But you're right in the sense that sometimes you don't get an opportunity exactly at the low end of the trading range because maybe it's going up and has a very tight range. If that's the case, then you can definitely make the decision to buy in and you can implement your own strategy like that. It really just depends on what I'm looking at. For something like gold, I pretty much just buy that every single time it has a red day, right? I'm not really thinking about that too much. So yeah, you know, um, things don't have to necessarily go down to the low end of the trading range in order for you to execute a position on it or add more. But it is preferable to be patient for the low end of the trading range. But yeah, some stocks end up not touching it for a couple months potentially. Thoughts on UiPath? I don't know what that is. UiPath. I don't even know what this is. Packaged software. Okay. Looks like it's had a decent run up here. Yeah, I mean it's not necessarily at the low end of the trading range, but I'd probably give it some more time. But yeah, I mean I have no clue what this company is, so $6.5 billion market cap, a little small for my taste. I usually don't try and buy things underneath a $10 billion market cap, so that's just my preference though. How are the trading ranges decided? It's not a decision, it's math based, right? So there's different variables that go into it. There's momentum, price structure, volatility, volume performance, all those different things go into it. So, but yeah, that's the in-house formula. But yeah, it's essentially all those different things. It's multi-factor. I'm a long-term investor. How can I figure out where levels of support and resistance are? I mean, just recognize them. I mean, just by looking at this one, for example, I mean, where can you look for levels of resistance, right? I mean, if you just draw a horizontal line, you had 1, 2, 3 levels of resistance, even 4 more recently. So, just by looking at that, $13.23 is a pretty significant um, support and resistance level, right? It's not that difficult to spot them, but you do have to have an understanding of the significance of when they break through them, or use them if they were previous resistance, seeing them in the future as future opportunity or future support levels. So yeah, I mean it's not that hard to find them and just draw them out. But was there a reason why you were asking that question? Correction in the next couple weeks. I mean, we've been seeing a 2-day correction already. So yeah, things don't go up in a straight line. So we could see a little bit of a continued correction throughout the rest of the week, but um, we'll see what happens. I mean, hopefully you've been raising cash when it keeps going up, and hopefully you just haven't been um, chasing the green candles. And yeah, don't ever chase. Don't ever chase. All right. Well, that pretty much wraps it up for today, ladies and gentlemen. I appreciate everyone for joining. Um, any book recommendations? Yeah, I mean, we have a ton of book recommendations in our community. We have about, I think, like 23 recommendations that are in there. So you can check those out if you wanted to gain access. I might just put those on our website. Oh, yeah, I forgot. Website's up. New website is up. Just go to macro-optics.com. Check it out. We pretty much did a little bit of a soft launch. There's actually a couple of things that we need to fix a little bit. But yeah, the new website is up and running, everyone. So, you can check it out there. Yeah, so pretty excited about it. Some of the stuff I need to figure out what's going on, right? I don't know why it's not showing our recent callouts here. Might be because I'm logged in to WordPress. But yeah, if you guys want to check it out, just go to macro-optics.com, play around with it. If you have any suggestions, I am definitely open to those. So, are there any news source with valuable information? News sources are pretty much after the fact, right? So, I mean, if you're only paying attention to the news, then you're kind of behind, right? The great thing about observing charts is that they front run a lot of the news. But yeah, I mean, you can just go to TradingView, or on our website here, we have like a top daily stories. So you can just pay attention to these as well. But yeah, let me know if you guys have any recommendations on the website here, and appreciate everyone for joining. Have a great rest of your Wednesday, and we will catch you on tomorrow's daily macro update. Bye, everyone.